The health of the global economy may very well lie in this man's hands. The largest real estate company in China, Evergrande, is failing, and the world is wondering what the Chinese president will do. So what is Evergrande? It is a company with 1,300 projects underway, including the ambitious Dubai-inspired Ocean Flower Island in Hainan, China. It is also building the Emerald Bay Apartments in Hong Kong. Its pride is the 100,000-seater stadium in Guangzhou, built for its own soccer team. It has 200,000 plus employees and over 1.5 million customers. So why is Evergrande in trouble? Evergrande, the largest real estate borrower in the world, has $305 billion in debt, an amount larger than the GDP of 140 countries. Just 54% of the loans are secured. More than $80 billion are due in interest this week, which the company has said it is unable to pay. It also owes $103 billion to its suppliers and contractors. Evergrande has borrowed from 128 banks and 120 other financial institutions. It has 1,300 projects ongoing with investments of $1 trillion. Scenes like these are common in China these days. It is not only Evergrande which is teetering under the central bank's crackdown on easy loans to the real estate sector. Analysts say the company could be too big to fail, and the Chinese government is likely to step in.
I think we can only take a guess in this moment. We can maybe there is some of the hints for the case of its peers like China Fortune Land Development, which have suffered in a similar situation. I think Chinese government would give a little bit help in both homeowners and investors.
This is what Indian investors are hoping for. But preparations are being made for the worst. There is fear among top honchos in India that Evergrande crisis could turn into a tsunami of bad news. On Monday, as the news of Evergrande broke, steel shares in India had plunged 6.8%. Commodities and mining companies took a hit as well, with fears that the Evergrande fiasco could result in credit crunch in China, a phenomenon which could push the entire global economy into a slowdown.
Indian markets will be restful for a while. We have run up so fast. Valuations are stratospheric at this point of time until some major inflow comes, which is unlikely at this point of time in the US. Therefore, market will run range bound and little bit in the correction mode because it's heavily dependent on how the US market is working.
While the government is trying to nudge some excitement into the markets ahead of the festive season, traders are focusing on the US Federal Reserve announcement on Wednesday. Any hint of an economic tapering could turn markets bearish in the short term. Bureau Report, Business Today Television.
Manoj Ramani joining us on this, and he's been tracking this issue for a very long time. Manoj, share with us really how this has come about. Before this, we didn't even realize that the issue was building up to such proportions. Is this a direct outcome of what has been seen as Xi Jinping's very, very harsh policy in recent times?
Right, Hava. Thank you so much for having me here. Actually, I sort of look at this and going back a decade now, to the great financial crisis, and you look at the Chinese investment-driven growth since then. There was a significant stimulus package the Chinese government had put out at that point of time, apart from what the American government had put out. And since then, for a very long period of time, Chinese economic growth has been dependent on heavy investment, and particularly investments in unproductive domains. And that's why we've seen this spurt of, not just debt, but also excess capacity in the property sector. For one thing, there's been a supply side recovery that they did in 2008. Coming back if you look at just the figures from that point of time, what you will see is that Chinese debt to GDP, GDP to debt ratio grew from 140% to about 260%. And last year, because of during the sort of COVID era in the last year and a half, it's again sort of inched closer to nearly 300%, which tells you that, immense supply side focus has led to some of these problems. Now, when there was loose money available, a lot of property giants borrowed freely, they invested freely, they pre-sold property, and they binged on this debt. If you look at Evergrande in particular, it's grown leaps and bounds to this massive proportion. It's expanded and diversified its business into so many different domains, including new energy vehicles and soccer, for one. And that era of loose money sort of started to come to an end somewhere around 2016, 2017. In 2015, 2016, you saw the Chinese stock markets go through a deep crisis. By 2017, once Xi Jinping took over as the General Secretary for the second time of the party, in that marathon speech that he gave, he spoke about the housing sector and houses being for living and not for speculation, which sort of foreshadowed some of this coming down the road. He also spoke about how financial risk and containing financial risk was a critical battle. And we were seeing some signs of deleveraging taking place. Last year, even during the pandemic, we saw this issue of Evergrande come up, and Evergrande has been in distress. Last year, you saw the Chinese government outline these 3 red lines, which were clear economic markers for property giants to sort of stop, for banks to stop lending to property giants, which were no longer financially stable in that sense. And what we saw at that point of time was that about 6% of all Chinese property firms qualified under those 3 red lines. And Evergrande was a big sort of problem area.
And there was a time, Manoj, when people were saying, or experts were saying that it's one of those that's too big to fail. Clearly not, and we are seeing this now become an issue that could have ramifications on the larger global financial market as well. Do you feel that we're looking at another Lehman moment?
Right. I mean, I don't think that comparison really works well in the Chinese context, and that's partly because, yes, Evergrande has significant liabilities spread over a period of time. I mean, at one point in time, its liabilities are around 2% of China's GDP. Yet it's spread over a period of time. Chinese regulators, the Chinese system is not as financialized as the American system. Chinese regulators can easily push the banks to lend. So the notion of, when the Lehman crisis happened, it was essentially trust between lenders that broke down, and modalities of lending crashed. So you no longer trusted on what basis you should be lending. In the Chinese system, the government controls the lending system. So it can very easily push lenders to continue supporting the system. So I wouldn't necessarily see a Lehman-type collapse. But what I do think we are likely to see is that we're likely to see tremendous strain across the property sector in China. We're likely to see tremendous strain on individuals, middle-class homeowners who paid for this, on investors who've invested in Evergrande, on people, on contractors, and those sorts of things. And my sense is that what we're likely to see is a difficult balancing act by the Chinese government, which at one level today is talking about common prosperity and supporting the little guy and sort of taxing the rich much more heavily. If it was to sort of suddenly come in and bail out a behemoth which is binged on debt and which is thrived on the moral hazard, and if it's going to try and continue supporting that moral hazard, then it sort of kicks the can down the road. Does Xi Jinping want to do that right now? It seems like it's a difficult balancing act for him to do, but my sense is that sooner or later we will see the government step in to support the company in one way or the other. I don't think it will be a direct bailout, but it will be a support to be able to make sure that some of that contagion across these different segments of society doesn't take place.